It's hard to believe that the fifth trading week of 2023 is already upon us. Yet here it is, featuring a collection of central bank announcements, not to mention the US Non-Farm Payrolls report. The coming 5 days on the markets are filled with promise. Welcome back. I'm Shane Vernier, market analyst over at ForexSignals and HowToTrade.com. On the heels of last week's hot CPI numbers out of New Zealand and Australia, all eyes are hyper-focused on inflation. How will the world's central bankers react to an uptick in prices? Are we in for more rate hikes and hawkish talk? Or will a soft landing and a dovish pivot be the tone? By late Thursday, we'll have our answers. Now, if the Bank of Canada is any barometer, then a series of measured rate hikes from the US Federal Reserve, Bank of England, and European Central Bank are likely. Of course, central bank announcements are about much more than that day's interest rate policy. Forward guidance is everything. Comments from Jerome Powell, Andrew Bailey, and Christine Lagarde have the potential to send markets instantly directional. Without question, the Wednesday and Thursday sessions will be range busters. In the markets, time is money. This week, there will be no time to sit back and digest what the Fed, BOE, and ECB had to say. During Friday's pre-Wall Street Open, NFP will hit the news wires. For December 2022, US NFP came in at 223,000. Consensus estimates are looking for this number to fall to 175,000 for January. Regardless of where NFP lands, action will intensify as the markets price the state of American labor. As you can see, this week is overflowing with vital fundamentals. Let's look at how to trade the action with our expert market analyst, Connor Woods.
Okay, so Monday, in my opinion, will probably be defined as the calm before the storm, with an extremely light set of news events. But traders may want to warm up in Europe, because we have got Spanish CPI, we've got German retail sales due out. Although these are unlikely to be, substantial market movers, I think there's some great opportunities in the euro right now, and that recent pullback we've had could provide an excellent opportunity to go long here. I'm going to have a look at euro versus the Japanese yen. When I get my drawings back up on the chart, ideally for me, and I've had this marked for a while, this level down here at 136.5 of course is quite far away, but that was my ultimate buying level. We've got a double bottom here, which is clear liquidity targets. With that being said, when we look at the price action at the moment, we're starting to see this range play here. I see no reason why for euro yen we can't see that move up in towards and fill in this candle imbalance that we've got before potentially moving lower and grabbing these two double bottoms. However, what I would notice is that Lagarde has been particularly hawkish, so this could be the base of this market now forming, and we could get a run up and we could see new highs starting to be printed. So that's something to watch out for. If we look at it on a 4-hour chart, we can probably start to see where we can get the key entry from. What I'd wait for is potentially a break of this structure high here, and then we can look to potentially go on the retest. But I believe that euro yen is going to be trading in a positive direction come next week. Now, Tuesday is the day where more significant news starts to trickle throughout the financial world. The high impact events that traders should be aware of are the Canadian gross domestic product and, more importantly, New Zealand's key employment data. If you look at the Australian dollar against the Kiwi dollar in recent times, wow, what a move it's been on. 5 out of the last 6 weeks being posting positive returns. Will it be a case of more of the same, or are we starting to hit restrictive territory here? Now, this is the daily chart. So you can see the target that I had in mind previously, was these equal highs here. We smashed through that It's as simple as that, with one of, if not the most anticipated events of the year so far, in the form of the Federal Reserve's interest rate decision. Now, the Federal Reserve, according to the markets, are 99.9% likely to hike rates by 25 basis points, which is obviously what we expect. And therefore, it's going to be the FOMC press conference half an hour later, which I think is going to cause the volatility. Before all of that, we've got ADP non-farm employment change, ISM manufacturing PMIs, JOLTS job openings. So there's going to be a lot to contend with on Wednesday. So we have to look over at the NASDAQ after the earnings we had last week. Now, that press conference I'm really intrigued with, because we know the Fed are going to hike by 25 basis points, but how will Powell react to what the markets are currently pricing in? The markets are currently pricing in which I think is a low probability event, which is that soft landing, which is that Fed pivot. I think he may come out and talk about how rates need to be higher for much longer. This could spell trouble for the NASDAQ. What's important on this current run that we've had is I've been trying to get short on this market, but I've been waiting for either a break of this low, which we failed to get before, that confirmation that we're getting that momentum shift, and then more recently a break of this mitigation area, which again we failed, and we then trade into the top side. So I'm yet to see enough evidence to suggest that we're going to go lower on this market at this present time. Maybe the Fed will be able to kickstart that. We will see. Now, what I would say is we're now trading around that 200-day moving average. So where we trade in the next couple of days leading up to that is going to be vitally important. Are we going to unlock any of this imbalance we've got up here around the 50%? 12,400 would be a fantastic, I think, selling opportunity. But this to me looks like a market which is fueled with hope, which I think may be coming to an end soon. So the central bank action continues on Thursday, with the Bank of England and the European Central Bank both delivering their next batch of interest rate hikes. In Europe, I'd say Christine Lagarde has been noticeably and quite convincingly hawkish anytime she's had a chance to speak. But over in the UK, substantially weak data is piling the pressure on the Bank of England to hold back that tad more. So this is going to be a fascinating session, and the key market I want to look at, despite it being particularly a ranging market and a difficult one to trade, is this Euro GBP market. Now, when we look at it from an hourly chart perspective, when I get my markings back up on the chart, this was my target from last week, which was hit, because the reason that was my target is because we had clear imbalance in here. That has now been filled. We can remove that. And I marked this potentially as a demand area for Euro GBP. Anything below this area, we've got balanced price action. So if we were to get a switch of rolls next week, and we were to trade lower, look for a break of this demand zone, a retest, and then really we want to be targeting 87214. I fancy this potentially to hold out, and if this does hold out, we can maybe look for a retest to go higher. And my clear levels in mind on this day will be 88524. So we've got two scenarios there to play out for on Thursday. So if you're expecting a calm week to the end, you're going to have a rude awakening. It's US Non-Farm Payrolls Day. This is always volatile in any climate, especially in today's one where the jobs market in the US is holding firm for now. Will this be the first time there's a significant decline in the jobs market? If so, expect quick, sharp movements around the release, and that's very, very important to keep that risk tight on this day. Now, gold always moves quite vigorously around NFP, and it's been one of the best performing trades of the year if you're looking for particularly market to go long. Now, someone in the room fantastically got in at around 1920. That seems to be holding well with a take profit above. We are breaking to the top side on the hourly chart. The daily chart doesn't look as clean, but as you can see, any pullbacks we've had really since November last year have been met with a break of structure to the top side. Can we expect more of the same with what we see on this price action? Now, for me, my key level to watch out for, you can see this demand zone was respected and we moved higher. Then we created another one as we break another structure higher. For me, we've got a lot of stop losses, a lot of liquidity sitting below these lows here and sitting below this range. I would, favour a move in gold next week down towards 1904, and that would be the ultimate buying zone for me to go higher. And I do believe if we can continue to grind to the top side, for example, if we break above these equal highs we've got, then we're potentially going to unlock 1960 as we go up. So a fascinating close we're going to have.
ECB, BOE, Fed, and NFP all in 1 week. Without question, the 5th trading week of 2023 is an absolute blockbuster. It will pay to have your game plan ready, stops down, and leverage in check ahead of each epic event. Best of all, we'll be with you every step of the way. The analyst team of Nick Quinn, Connor Woods, and myself will bring you the Fed, BOE, ECB, and NFP events live as they happen. We have a collection of dual and tri-streams scheduled and ready to go. And if that's not enough, our live squawk feature will let us pass along breaking news and insights in real time. So batten down the hatches, prepare for a monumental week on the markets, and we'll see you on our next live stream.